Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, welcome back to another live stream. Hope you're doing well. Bear with me. I was just sending a message really quick. Monday morning and some interesting stuff. Interesting stuff to get into. Hope you're all doing well. We've got, well, some big stuff happening this week. If we take a look at calendar here, tomorrow we've got NZD cash rate. On Wednesday, we have a FOMC meeting minutes. Thursday, we've got CPI, and Friday, we've got PPI. So it is a big week in terms of potential volatility due to inflation readings. So last week, we got a lot of jobs data and got a real strong reading from the economy last week across the board. And this coming week, we're going to get a good reading on where the inflation situation is. So should be really interesting to see how it all plays out. I am still very bullish on indices at this time. I do have some positioning on the long side, and we got some setups coming in on the Edge Finder here this week. For sure, we've got Nikkei, Dow Jones, DAX, S&P, copper, Bitcoin, oil. I mean, you've got a lot of different potential bullish readings going on in the Edge Finder. And if we flip it around, well, let's just take out the neutral readings. You can see we've got some interesting stuff here, guys. Gold and silver are getting bearish readings on the Edge Finder. So is that going to be a trade setup for this week? Let's see. Let's see. If we could take a look at gold here, for example, this is not a chart that I want to sell. I'm going to go ahead and say that right now. From a technical perspective, I don't love the idea of shorting gold. But I'll tell you what would get me potentially bearish would be if you actually saw breakouts to the downside on this one. So if you see, this kind of move here, if you get a breakthrough support, that could be really interesting. If you start to see breakouts, lower lows, lower highs, that sort of scenario, definitely interesting. We've got stocks a little bit lower here this morning. NASDAQ down the most by 0.3%, quarter of a percent down for S&P 500. Gold's down mildly. Silver's down 1%. It was down a lot more actually previously, but we've got a little bit of a bounce back on the silver chart. So what flipped? Why gold bearishness? Well, let's break it down a little bit. Last week, we had some employment data that came in pretty weak for the United States, and that's dragging the score here for gold. If you notice, again, jobs added were very strong last week, and unemployment rate went down last week. It was a win for the U.S. economy, and a win for the U.S. economy is not particularly bullish for gold. So we actually have a bearish reading on gold. Now, again, does that mean that I go out and short gold just because the Edge Finder is bearish on it? No, I'm still waiting for a proper setup. The Edge Finder is not a crystal ball magic machine. It is simply an economic data screener. And so when I see that we have a potential bearish setup, then I'm looking for technical price action to actually give me the setup. So I might look to short it if I can get the setup. So what I'm looking for on gold would mean, or what I'm looking for would entail a break of this support level. Now, what if we just don't break that? What if we just actually just break to the upside? Well, then there's no trade for me. I'm not going to short into just an absolutely beast mode strength chart. But if we start to see, resistance start to hold, if you start to see sellers making a move on gold, then you might entice me, right? And most of it, guys, goes back to the dollar. The dollar index is looking real strong right now. Here's a daily chart view. We discussed this last week a lot. The dollar index is breaking out, it looks like. And this is a chart that I really like, especially if you get a pullback into this area or a break and retest of this area. I'd classify myself right now as bullish on the dollar. And it's been a minute since I've been bullish on the dollar, but last week was so good. So let me break down here why I flipped more to the bullish side of the US dollar. It's because last week we got just winning economic data. So let me show you services PMIs first. Services PMI make up like a huge portion of the US economy. We're a services-based economy, as they say. And what you can see is that services PMI last week was a big hit. And this is a pretty important reading. The Purchasing Managers Index essentially surveys a bunch of decision makers in corporate America on where they see things going. Do they plan on hiring people? What are their inventories looking like? How are sales projections looking? And if those numbers, if they get survey responses that are very strong, it is usually a forward-looking indicator of the economy. So last week, we got prints from the surveys were very strong. 54.9 compared to the forecasted 51.7. So, this signals to me that the US economy last week showed signs of being more upbeat than people thought. This is just one. There's more things I want to show you. The big one, the obvious one, was the NFP report last week, right? Jobs added last month were really solid, 254,000 compared to a forecasted like 150 or so. What was the forecast? 147. So before I move on from this, a lot of times people will point out that they revise numbers lower for the jobs data very frequently so that, you can't trust these numbers. And that may be true. That may not be true. I'm not a conspiracy theorist and I don't know. Like I can't give you any proof to or from this data point, right? I don't know. And you don't know either, right? We're not the Labor Bureau statistics. We don't have, if they're fudging the numbers, then how are we going to know that? We don't know. Now, they did revise a bunch of stuff in the past year down. So that is fair to point out. But they actually revised the previous month of August, they revised those numbers up. So there has been a tendency to revise numbers lower. But last month, not only did we beat jobs, but we revised the previous month before that higher. This yellow line, by the way, guys, we've mapped this out in the Edge Finder. The yellow line is your revisions. So you can see that oftentimes we're revising, lower. Sometimes we're revising higher, sometimes revising lower. Last month, we got upward revisions and we got very strong beats compared to expectations. So when I look at the labor data and I say, look, this stuff is coming in strong, that is an upbeat thing for the US dollar. That's going to lift expectations for dollar strength because it's going to reduce expectations about rate cuts. Remember, the Fed likes to cut rates quicker when things are looking more tough in the US economy. But jobs data being strong is going to limit how many rate cuts we get if that continues to be the theme. Now, you could be, somebody who thinks, well, that's just a blip. It's going to go back down. It's going to get worse again. And you might be right. But right now, the dollar is operating off of what we got last week, which was upbeat numbers in the labor world. So I just want to point that out right now. Even if it's short term, dollar strength seems to be the path of least resistance, in my opinion. And so if we get dips, I am looking for upward strength. And I also should mention that this strength in the labor data and the PMI data is impacting things very heavily on the edge finder. As I mentioned, we flipped into bearish territory for gold and silver, and we flipped way stronger into the indices. The Dow Jones is getting a bullish reading. The Nikkei is getting a bullish reading. Bitcoin, S&P 500, US oil, things that potentially could benefit from a stronger labor market and a stronger economy, like oil and the S&P 500 and copper, are seeing more strength in the algorithm's output in the edge finder. Hopefully that makes sense. If you guys want to try out the edge finder, we got a link here in the chat. If you're watching with me live right now, look at your live chat on YouTube or on Twitter. If you're on Twitter, you can look at the pinned comment. We'll pin a comment there for you. And you can actually try out the edge finder. So my company, A1 Trading, we build software tools for traders. And if you'd like to try out the edge finder for 30 days, you can apply to do so using the link that's just been dropped here in the chat a moment ago. If it's easier for you, you can also find the link to try out the edge finder in the description of this live stream. So where am I looking? Well, Bitcoin looks interesting. So I'll tell you this. I think right now, I dare say that we seem to be in an environment that looks a little Goldilocks. Now, what I mean by Goldilocks is that the US economy is looking not too hot, that it's going to be inflationary, but not too soft that it's going to look recessionary. And that leaves us in a pretty good spot for outlook. Now, again, you might point out, well, Nick, stocks are valued really high. You might say, this is a bubble. This is going to be an overvalued market that collapses someday. And if you say that long enough, you're going to be right. But markets trade on sentiment. And one key sentiment indicator here is that we've got an election coming up. And it doesn't matter who the president is, the standing president is going to do what they can right up to the election date to inject money into the pockets of consumers to make them feel better going into the election. That's not a Democrat thing. That's not a Republican thing. That is a human thing. If I was the president, that's what I would do too. Because you want to make people feel the best possible right before they go to elect again. So that is another tailwind to the markets in the short term. Now you could argue in 2025, it's going to change. Things are going to, go worse or go better or whatever. But right now, I'm a market trader. I'm trading what is in front of me. Right now, we've got good labor data. We've got inflation coming down. We've got an election ahead of me. So I am bullish. Now, that doesn't mean the market can't dip. It totally could. But I would be a buyer of those dips until proven otherwise, right? I think that dips in this market are innocent until proven guilty. So if you get a big dip, I'm not saying you hold on to this with your whole, life. And if it crashes, then you just go down with the ship. That's not what I'm saying. I'm saying that as a trader, I might look for these pullbacks with stop losses below structure and try and continue to let the rally, do its thing. It's been trending and trending and trending. So anyways, I'm long the NASDAQ. I'm also long semiconductors, SMH, with stop losses on my trade. So if the market tanks, I get taken out of the trade. I should mention that all of those trades, by the way, are shared inside of our Discord channel. And if you'd like to get access to the Discord signal service that we offer, you can see all the trades being taken. The value of this service is that you can see full in-depth analysis behind every single trade. If you'd like some information about our signal service and what a membership entails, what it costs, questions about it, you can send a direct message to a member of our support team or head over to a1trading.com/VIP and you can get access to what our service offers. It's not a copy and paste. It's not financial advice. It is literally just you get the notes that I'm taking on the trades that I'm taking, why I'm taking them, so on and so forth. We don't claim you're going to get rich quick. Trading is really hard, but this is basically a way to track our trading journals and see what we're trading and why. When I say we, I'm talking about myself, Frank, Chris, and Ivan. We've all got our trades being shared in this one portal for our members. If you'd like to get access to that, again, send us a direct message here and we'll get you set up with a membership for a streamer discount or a live stream viewer discount. What are your thoughts on gold? Again, I mentioned it earlier, but I am looking actually more on the bearish side of gold, but not unless we see price prove it. So I've said this a couple times. The Edge Finder is actually giving us a bearish reading on gold and silver for the first time in a while. But the only way I actually take a trade based on that is if we start to see breakouts, failures, breakouts, failures. I need to start seeing that chart actually reverse, because right now you're staring down the barrel of a raging upward trend. And you've also got geopolitical stuff that is just a big question mark. I think that the labor data last week was very bearish for gold because it was very, rate cuts are going to slow down. Economy is looking strong, which is not particularly bullish for gold. But I think gold is being propped up right now by what is happening in the Middle East. People are uncertain, and there's a premium on the price of gold right now. On the Middle Eastern stuff, of course, that is a terrible, situation, and loss of life is never something that we, nobody wants to see that unless you're absolutely insane. 99.9% of us are, hoping and praying for peace there. That being said, as long as that situation continues to be escalated, the price of gold, I think, is going to continue to hold a premium. We're trading at 26.50. Going into this year, how many of us thought we'd be at 26.50 by now? It's a crazy, crazy bullish year for gold. That being said, I do think it's had a really strong run. And if we see any positive news out of the Middle East, gold is probably going to drop pretty hard because we've had strong labor data to basically push price back down. So, but I can't predict that, right? I can't predict what's going to happen in the Middle East. And I don't think many of us would claim to be able to do that. So for me, I would just need to see price action start to fade this move. And then I may start to look for opportunities to get short side with small size, because again, you're fighting an uptrend. So very, very timidly, cautiously bearish on gold, but definitely not shorting it after a big move up like this. Just because it's moved up does not mean it has to come down. It's simply just the economic data has swayed me a little bit more to the bearish side. So in terms of other setups, please look at USD CHF. I don't have any current readings on dollar Swiss, so I'm not going to look at it. I'm going to stick to what I actually have some conviction on. Taking a look at the Dow Jones here quickly. So the Dow Jones, or US 30, is another one on the top setups radar for the Edge Finder currently. This one's been one that I've wanted a little piece of the action here, but waiting for a pullback. If we can start taking out these support levels, if we do see a bit of a corrective move this week, there may be an opportunity, in my view, to pick up the Dow Jones on a discount. 50% retracement would put us at 41,350. So we'll see if we can get that. That would be from peak to trough a pullback of about 3%, which in this market, as long as the bull market continues to be strong, I think that that's a discount that I would take a stab at with a stop loss. Please explain how the economic data from Friday affects. I did that earlier in the stream if you'd like to back up. The long story short is labor data was very strong. That's good for the dollar, weak for gold, good for stocks, in my opinion. And if we take a look at the services PMI, same story. Weak for gold, strong for dollar, strong for stocks, as it means that the economy's in a good spot, or at least in a good enough spot. Fed's still going to cut rates, just may do it at a slower pace. That's why we see yields rising, right? If you take a look at the yields world, yields are on the rise now because, again, that labor data popped expectations that, the economy is in a better spot than maybe what was previously expected, which means the Fed may not need to rush in to save the day and cut rates quickly. S&P 500 still about flat on the day, just slightly negative. Same thing with the NASDAQ. Take a look at semiconductors here this morning, see what's going on over there. Semi's actually doing quite well this morning, which is awesome. NVIDIA is a stock that I own. Let's see where NVIDIA's at. NVIDIA, oh, baby, are we getting that pullback? I'm sorry, the breakout? NVIDIA's up 2.2%. We will take that all day long. Russell's down 0.5%. I'd be interested in the Russell if we get another big swoop lower, but I don't think we're not getting a bullish reading. Bitcoin, however, is also another trade setup that I'm actually looking at now. So I sold puts on Bitcoin, which is probably looking pretty good right now. Let me see if I can pull up some options stuff here this morning. Take a look at the account. Just slightly red on the day here between everything. Bitcoin, yeah, those puts that we sold are up about $275. Not bad. Sold Amazon puts. Oh yeah, look at that. Puts are looking good this morning. Everything I sold, I'm clicking this and it's updating because options market is just getting open, so price quotes are still coming in. But anyways, looking decent on the options side. I sold a bunch of puts last week, so we'll see if those when you sell puts, you actually want the market to go sideways or up. If you buy puts, you want the market to go down. When you sell them, you get paid a premium to do so, which is a good chunk of what I do in the markets, actually. Nikkei's down another 1.27%. Taking a look at the 4-hour chart on this one. This is a bullish setup on the Edge Finder. It's got a nice bit of an uptrend forming here. Could be an interesting one if it does a little bit of a break and retest through the highs. That could be a setup. Or if we pull back a little further into support, may be worth an attempt on the Nikkei long side. A lot of volatility happening in Palantir. Dropped nearly 2% with about 5 minutes of market open. Yeah, what's going on with Palantir? Frank owns a bunch of Palantir. He's done really well with this stock. Down about 1% here this morning. Yeah, look at this beast of a company. This thing has flown. It's an AI stock, which of course has a lot of hype around it. It's not a cheap stock on valuation, but it's, that's the thing. Sometimes the companies that are not cheap, like for example, Amazon, if you had said for the last 10 years, oh, this stock is too expensive, well, you missed a great stock. Sometimes things trade expensive because they're worth the premium. Right now, if you're a gold trader and you're buying gold, you're paying a high premium. You may think that it's worth the premium because of the, concerns in the Middle East. If you get bad news today, then it's very possible that gold takes out the highs real quick. If you get peaceful resolutions, the opposite could be the case. This thing could drop real hard. Watching the indices here this morning. Here's the 5-minute chart. Stock market just opened up a few minutes ago. NASDAQ, same thing, getting some volatility back and forth. But look at the Dow Jones. My goodness, this thing just dipped in the morning and then just flew past the highs here. Some interesting divergence. NAS is lower. Dow Jones is actually taking the lead here, or just about to take the lead of the three indices. Look at that, Dow Jones. This is US 30 or the Dow Jones. Bunch of value, boring companies. But sometimes boring can be great. Taking a look at the dollar index here this morning as well. Here's your 4-hour chart. Nice upward trend here forming. On the daily chart, you've got a breakout of the downward structure that we see, which looks really good. We've been following this real close inside of the Telegram channel. I've been doing a lot of DXY analysis. If you guys would like to join the Telegram for free, we'll drop the link here. You can get the analysis that we're putting out there throughout the week. We also do offer a free stock market analysis. If you're looking at like individual stocks or options, if you're interested in that, we also offer a free stock market Telegram channel. We've got 2 Telegram channels now, one for FX and futures, and the other is for stocks. So if you'd like to join each one of those, maybe we can drop the link for each one. TLT is a little bit lower here this morning. High yield corporate bonds lower. Yields are higher. That's why bonds are lower. Bitcoin, again, possible trading setup for me actually on Bitcoin. I'd love to see Bitcoin start taking out these highs. And if we can start seeing that, I would probably actually be a momentum trading buyer. If we can take out 66,000, break and retest opportunities actually look really good to me. Which is crazy because it's like, oh, you're buying high, but the intention is you buy high, sell higher, right? That's the concept of a momentum trader. value traders or position traders might choose to go more with the route of buy low, sell high. The difficulty there is buying low, selling high sounds easy when you say it, but it's quite difficult in actuality. If you thought you were buying low, let's just go over here. Like if you thought you were buying low over here and the market just kept going lower and lower and lower, and then if you thought you were selling high over here and the market just kept going higher and higher and higher, that's the difficulty of markets. I actually prefer with my active trading, like to be more on the momentum side. So I'm looking for, if something is trending up, I'm looking to actually be a buyer and trade in that same direction rather than trying to fight that trend. The PMI section fixed? It is. Yes, we worked over that this weekend. I think we got that sorted out. So PMI data, if we go take a look at the stock indices screener, you can see that we do have the latest services PMI numbers in here, and we are good to go. S&P 500 is getting a +6, and I saw something recently that showed that we have had recently one of the strongest average stock in the market performance. Like the breadth of the market has been very good. And if you don't know what I mean by that, think about like in the S&P 500, there are many different companies. For a while, we've seen just a small number of companies do most of the heavy lifting. Notably, the one that everybody knows, NVIDIA, has done really, really well. But in recent times, we've seen the average stock starting to do a lot better. So think like random companies like Caterpillar is doing well. Or if we take a look at like Coca-Cola, like more companies are actually picking up the pace and trending up now than where it was for a little while, which was just these huge companies were doing really well and everything else was doing, not so well. So just something to think about is that when and I've seen some research that's basically shown that like when the market itself, when there's lots of companies participating, it's a stronger rally and it has more sustainability. I saw some, you'd have to go find this thing I found, but it was like a research, one of those like 50-page PDFs on historical stock market stuff. Like in the event that you have a larger portion size of stocks rallying, it is usually a more sustainable rally. So to see that recently has been really positive. A great way to check that is to take a look at the RSP, which is an ETF that tracks the S&P 500, but it gives an equal weighting to every stock rather than heavy weighting on the biggest ones like the SPY. If you pull up that ETF, that's putting a lot of weight in Apple and NVIDIA and Microsoft, but the RSP is putting equal weight into every single one of the 500 companies in the S&P 500, which arguably gives you a better read on how the average performance of the stock market in the large cap world is doing. And so you can see that thing has actually really started to pick up the pace, which is great news for the state of the rally, in my opinion. When you get it going sideways or down, that's saying that the average company is not really enjoying the benefits. But now with rate cuts on the way, with labor data coming in decently well, I think we're looking okay. And I'm a buyer of dips until something changes. Now, hear me out. People will say, Nick, you're buying near an all-time high. You're trading this thing long, maybe right before a big crash. But you could say that at any point. And eventually you're going to be right. If you said over here, stock market's going to crash, well, the next time you got a big dip was months and months later, and it didn't even come back to that area. So the difficulty here is that if you're going to be bearish, you also have to be bearish at the right time. Otherwise, you miss out. And that's the difficulty of just shorting these things in general, is that unless you catch a full-on, downtrend in the market for a few months or years, it's very difficult. So just food for thought. It's generally why I do tend to be on the long side. But even if you're a perma bull on the stock market, as a trader, you have the luxury of picking where you want to be the most allocated. So for example, I personally am more heavily allocated to semiconductors within the stock market. So I'm not just buying and holding the index. I'm trading in and out of sectors or portions of the index that I like better than others. So I like semiconductors because they have massive sales growth and they have massive earnings growth. And I think that they have a lot of strength. So Anyways, we've got our next guest coming in. It's Ivan FX, who's going to be coming in here and talking a little charts with you guys for a little bit. I'm going to step out. I got to run here. Got a couple things I've got to get to. So, Ivan, I will miss you, and I'll think of you. But you've got the show here just after this quick break, and stay tuned. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey Nick, how's it going? Oh, you're not there anymore. Okay, I got you. I think that it's important, or funny enough, I just might say, that we look at the weekly update on interest rate expectations in the market. Evan, hold. So, I am a freak show. So if you want to be a part of it, cool. I'm bearish on dollar, bearish on yen. Dollar's rising, but who cares? But regardless, we're going to get there. Rate cuts by the end of the year. At the moment, there is a 94% chance we're going to cut again in their next meeting. We have a 25 basis point rate cut expected from ECB, from the Bank of England, from the Bank of Canada, from the Bank of RNB, which is tomorrow. It is tomorrow, which is a 50 basis point rate cut, which is massive. Joking, but it's a double, so it's better. It's better than nothing. So those are the rate cuts, and of course the SNB. I had a meeting earlier this morning with the mentorship students, and it was in the VIP webinar. It was really fun because there was people asking questions. But what I said there, or I problematized the relationship between SNB and Bank of Japan and what might be happening. Anyways, I wasn't planning on saying that, but regardless, there is likely no chance from Bank of Japan from the next meeting, but they might rate hike maybe December, January next year. That's out of the way. Let's go to the markets. What day is it today? Oh, Lambert is happy to have me. Okay, cool. What day is it today? It is 1 month until the US election. Good answer. Not that that matters to anyone, but to me it matters because I believe we're going to be dancing around, maybe having a bottom by the time we get the election. So I'm a bit under the weather in terms of trading because there is no trend. We're not trending. We're going up and down. We're not going anywhere. What's going on? Gold is going up. Gold is going down. Gold is going range bound. We are not low. We are high, but we can buy. There's nothing, you know. Hi Sebastian. That Discord is discontinued. But if you ask questions, I'll answer. Don't worry. What is your opinion about the Chinese stocks? I don't have any opinions on the Chinese stocks. But yeah, sure. China's not doing too well, and they're trying to spend a lot of money on it. But in my humble opinion, China isn't the best place in the world economically at the moment. So yeah, that's kind of my negative, slighted direction there. So dollar, we had the new NFP number on Friday, which was much higher than expected. Send dollar higher. Dollar has paused, hasn't continued yet. That's a bit weird, but regardless, I'm bearish on dollar. So if I were to say, "Ooh la la, we should go for a sell," we are at resistance. No worries. Okay, cool. But okay. There you go, Sebastian. But cool. What was I supposed to say? That we are at resistance. It doesn't really matter that we are resistant. We can be at resistance here. We can be at resistance here. We can be at resistance here. But what really matters to me is lower, 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 high, continuation, lower. And we might get so much, not because it doesn't really matter to me, because if this one continues higher, it's only the better price for even larger falls. So the better, the higher. Hi, Sibilolo. Hi, is the US stock market possibly correlated with dollar? No, it's kind of like your sister. Sometimes you like her, sometimes you hate her, but you still overall love her in So are you correlated to your sister? That's kind of my answer there. So US data came out really good. Dollars bullish for now. Yeah, so I love a dollar bullish. I love a dollar bullish. So I can sell it later, but clearly it is higher. Clearly it has gone higher. So I'm not going to take that away from you, GFX, but it's just that the overall economics, as long as we still have inflation 2.5, which was really great, we're gonna fall in the end. So what I mean by I correlate to your sister, said in a more professional way, it's yes and no correlation between stock market and DXY, because it depends who. If the money is coming from the outside of America, then you have to do a Forex exchange to get access to the stock market, right? So you have to buy dollars, sell your local currency to get access to the stock market, right? And if the money comes domestically, which it mostly does, the indice goes higher without it. So I don't see those together. Sort of more like in a risk scenario where everything is horrible, then the dollar goes higher, stock market goes lower. But that's kind of the only denominator. They are driven by, inadvertently correlated. Dollar goes lower when stock market goes higher, but there is a lot more to the stock market that is not. There's a lot more to the dollar index than there is not in the stock market. So it's kind of like comparing yourself to your sister as a guy, because, or a sister or sister for that matter, is like you're still two individuals. You have the same parents, but you can act independently and very much or even opposite of the other person. And by the end of the day, you're still two individuals that is, of opposite genders. So that's the only way I can say it. And I didn't say anything if your sister was hot or not. This month we have major countries expected to cut rates, so this will be bullish for dollar. No. Tandenda. No, it doesn't really matter what other countries do because it doesn't move the dollar. Okay, are we going there? Am I explaining the dollar situation, like how the dollar moves the world, kind of a thing? Or have I done that too many times now? You guys can respond to that, and I will do it in afterwards. But no, I'm very good, Lou. Jacob, sorry. I think New Zealand will be cutting this week. Yeah, I just said it kind of like 2 minutes ago that they are expected by 98%, 94% probability of double rate cut tomorrow. So there's that. Cool. Australia falling. Great. I think that's a great decision to be done. That it's falling. We're on the 4-hour chart. I love that, and I love that kind of price down there. The only problem here is, of course, we are falling. We have the inflation. We have the election. We are not really trending. Yes, we made a new high, but then we made a new low, and then this is the previous bottom, and then maybe we do a 100% retracement. Sorry, that was bad. On the Fib, but we're currently at the 51. Well, I don't really care. What do I care about? I care about reversals of trend. If it's so, do so. Then I will take it higher. And if it doesn't, then salute. We'll take it later. So that's kind of what I'm waiting. And I'm very, in as much as I do what I do when I trade, I am very simple. I need a bullish trend when I want a bullish trend. How does it look like? Like that. Do we have that right now? No, we might be here at the moment. So I need a day to wait or so. What's your bias on dollar indices right now? Maybe I'll get my answer. Dollar bearish because of low inflation and stock market to fall because of the election, but overall going to be much higher by end of May compared to now. You bought Aussie yen, Aussie dollar. Yeah, I'm sorry, but Jacob, but I would say it's too early. Who asked about the so Tatenda? It's that dollar is one moving. So if USD is lowering interest rates, all the other currencies will increase because the fall has the weakness has to go to strengthening something, just because it's like energy. Energy doesn't disappear, it just goes into a different form, right? So when ice melts, it goes into water, it goes into fixed form, right? Liquid. And when the water evaporates, it goes into fog. It goes into I can't even say that now. It goes into fog, it goes into and then it comes down as droplets again. So it's kind of like it's a ever-ending circle of money in the currency market. So when dollar falls, other things rises. So, and then when dollar rises, everything else falls, as you can see here. So it's kind of like, dollar, Australian dollar, US dollar is the beneficiary or the one that falls the most when dollar strengthens. So if Australia cuts today or strengthens or increases interest rates today, it doesn't do anything to dollar. But if dollar increases decreases their interest rates today, Australian dollar is going to rise. It's kind of more like who is the bully, not bully, who is the strongest one? Dollar is strongest in terms of masses, in terms of money, in terms of inflation, in terms of influence. Sorry. So whatever dollar does, everybody else does. Opposites. If a dollar cuts today, there should be you got me there. You got me there. So why is it so, Tadanda? It's because where are you getting your money from? Where's the funding? Or for that matter, where is the return? Where is most return? So right now today, you're getting 4% on the 10-year. Okay, you get 4%. But if you look through COVID, Australian dollar made you 35%. But in the fall, it lost 20%. What do you take? Right? Which one do you take? 4%? But your mandate is to make 5, but it can make 35, but it can also lose 20. All right? So you would tip out in and out when you believe that there is more light and more chance, given the risk that you're already taking, that you're going to make 35 and not lose 20. Boom. Why are you bearish on dollar yet you got so much stronger labor data? Okay, I need to breathe. Okay. I said very quickly earlier, why am I so defensive? It's because of low inflation, 2.5. It's very close to target. Labor data has always been strong. It's just that lately it was a bit weak. It's always been strong. But we always looked at inflation. But yeah. Okay, cool. We'll go to dollar yen. Australian dollar currently falling. I want it to rise whenever that is happening. Okay, euro the same. Oh, okay. Want it to rise. Nothing yet. How does actually yet look like? Actually yet looks like what happened 17th of April. Bottom goes around, comes back up, and then rises eventually. Okay. this is kind of how it looks like. So currently we are not seeing that at the moment. This is just picture, take a photo, and then over there. Cool. Go over there. When I see something, Pasha, I see you, I feel you, I hear you. New Zealand is falling. So they're going to cut interest rates tomorrow. So they're probably going to fall a bit more. But yeah. So nothing there yet. So hold your horses. Dollar CAD. Where was it when we talked about it? Was it over here maybe? Okay, it's rising. Okay. I don't have any thing to do there, but okay, cool. So I talk about Australia falling. Australian dollar yen. If you use pivot points, not that that matters to you, but it's about to get into a buy yet. I haven't bought yet because I'm waiting for it to fall. So that is about 113. So we are almost there. For Canadian dollar yen, we are still a bit high. I wanted to be down at 108, which is still very high. Euro yen, you're not even giving me $1 million, and I'll still not buy euro yen. It is ridiculous at the moment. That is 150 pips, or so 90 now. Oh no! That candle there is 40 pips. It isn't happening that I'm buying that one right now. The risk is giving me a heart attack. US data has changed. It came out stronger. Yeah, so the thing is, a GFX, it doesn't matter. Okay, it doesn't matter. If it came out stronger, because what it depends on is how do you interpret it, right? So I'd say that inflation comes in lower. That makes me bearish, flat out, right? And then every other number out there says bullish, right? The growth says bullish, PMI says bullish, job data says bullish. Okay, cool. That is your interpretation, right? The point is how do you read that two conflicting scenarios, right? So you have said is dollar bullish. Great. Right? I said dollar bearish. Great. But I'm still going to wait for my dollar bearish setup. And I can wait. But you already have your direction. You already have things happening, right? So you win and I win. I just have to be a bit more patient, right? So don't worry. And I hope you're in profit since it's bullish now. So, do you think your pound dollar will fall or move or not? But I don't know. Do you have any setups on it? Because it's kind of like telling me, is it going to rain today or not? Like, I can ask the weatherman, but it's probably going to fall more. But like it's my setup, it's not favorable to either direction at the moment. So there's that. But again, GFX, that's your interpretation, right? I don't see 2.5 inflation as being better, right? I see it as being worse. And inflation is the leading indicator to look at. All right. And the difference between inflation rate and interest rate is now above 2%. So they should close it down. But that's all. But of course, they're going to cut in. They're still going to cut in the next meeting. They're still going to cut in December. So regardless, they're still going to cut. So does that lead to dollar weakness or not? It depends if the market pricing too much cutting. But that's all. I also said back when we were at the bottom on dollar that we had going into the Fed meeting, we had everything was skewed to dollar rising because we had priced in too much in falling, too much bearishness. But okay, cool. For dollar yen, dollar is incredibly weak at the moment. So the only way is higher, to be honest with you, with the dollar strength as well on top of it. It's actually not too bad. I remember us being over here, and then I remember us falling. I was falling at 800 pips. It is a lot of pips going out here. So to me, it's bullish, mostly because of yen weakness. Most likely. But when dollar gets weaker and yen gets weaker, we should probably range bound. But it is. I've done this UJ many times and worked out. Drawdown doesn't affect. Okay. So what do you want to do? Ball out? You want to buy it? Oh, you sold. Ah, okay. Go. Okay. Don't worry then. You're gonna sell on euro, on pound, and it's relief when someone's more experienced. Like, yeah, yeah. So don't. Yeah, it's a relief to you, but I also want you, Basha, to really talk to yourself a bit hard and kick some stones and be like, this is a test. I'm going to see if I'm right or not. And then if you're wrong, okay, cool. I'll move on. Okay. It's like, if you are you able to pick up this piece of plastic if you, it's for USB thing, right? So if I toss it into the air now, am I going to catch it the same way it came back down, right? So 3, 2, 1. No, it didn't. It fell on the ground, right? So I believe that I could pick it back up. It hit my hand, but it fell off, right? That's how trading should be. It's your hypothesis within the risk that you have, within the biases that you have, within the information that you currently have. And then at some point it's going to be 50-50, but your process and your theories has to take away those uncertainties down to a bare minimum so that when you are entering, you have all the odds with you at the best as possible. But of course, you're going to have losses and you're going to be wrong. But you're going to be in situations every single time you take a trade, you're taking the same trades every time because you know over time that is actually going to work. Right? Your process, your mindset, your way of thinking is what's going to set you apart from the market, right? So when you are thinking of, okay, let's say you wanted to be bearish on CAD yen, but how do you see this trend? Are you going to sell it? Is this a market that's favorable to you? A, B, C, D, E. Okay, technically, probably not. CAD is having falling inflation. Japan is having rising inflation, but isn't doing anything about it. But it actually leads to cuts in Canada, and they're going to cut in their next meeting. Okay, so fundamentally, it might be bearish, but technically, it's very bullish at the moment. So in that situation, I probably shouldn't be so aggressive trying to sell it down because we're currently in a very strong bullish trend. And therefore, you are moving forward to your next setup. Okay? Thought process. What does it lead to? What does it lead to? What does it lead to? That's the only way you can change your behavior. Because if you're taking a trade today and then, what do you call it? Hezbollah rockets Tel Aviv and takes out the government in Israel. Whatever happens, right? Something grand. America invades Iran, for that matter, right? Something big. What is going to happen to CAD yen? It's going to drop like a ton of bricks, right? Was that in your plan? Not really, but you want to sell it anyways. Okay? Is it likely? Probably not. So, in your probable cause and in your mindset and in your way of thinking, your way of processing information that you're given for free by the markets, by participants, whatever, is the way that's going to set you free. And you have to believe in yourself, and you have to believe that you're trading as well, that you're able to do it, right? So when you sold your dollar, you thought, okay, cool, your dollar is going to be higher, euro is going to lower. In this current market situation, this is bearish. We sell. Great, you figure it out. My only question: did you take any profit last week? And if price comes back up to this resistance here, are you going to sell or whatever? What is now your next step of action? And is this current small little rise that's currently on euro dollar, is that conclusive with you continuing being in that trend? The same thing for pound. Is this new lower low conclusive with you still being in that sell? Or is with that fall happening there, that was a quite big one, with that pullback, which is deeper than that one, which so it starts to get deeper, is that conclusive with you still being in the sell? Point being, every time, every day, every moment is whatever is happening in the market inconclusive with you still being in a trade. That's based upon your experience, based upon what has happened before. And in many cases, when you're technically trading only, your answer is probably going to still be, I'm still going to be in it because there is no higher high. Cool, great, go. Next trade. Right? You know what I mean? You catch my drift? It isn't more about it's more about how you're thinking. And by the way, for New Zealand dollar tomorrow, I do think it's going to fall tomorrow. Right? Well, I can say I think it's going to go down tomorrow. We're gonna drop a bit more. But you said we're dollar bearish. I'll wait. It's not life or death. It's gonna come back tomorrow. It's gonna come back another day, and then we have the election, and then we're gonna be higher than 61 to the New Zealand dollar. We're gonna be higher than 61 by the end of the year. That's just by theory, right? And if I'm wrong, I'm wrong. Then we pack up our bags and find something else to do, right? I just wanted to say that I am bearish on yen pairs. I am not conclusive of what to do at the moment because the risk is a lot and great. I am mostly on the sideline. I cannot touch the Aussie, New Zealand yen. I'm thinking about Australian dollar, Japanese yen, or a CAD, but they're all very high and not really, really low. So that is kind of my trade plan, and dollar pairs going higher is currently not happening. So I'm just going to wait until tomorrow. And a reversal of a trend generally takes a day or two. So I am easy peasy lemon squeezy.
Hey, Ivan, how you doing?
Hi, James.
Hey, I want to thank you for coming on today. We've got Chris coming up next, but we've dropped your YouTube here in the chat. Guys, if you enjoyed what you heard out of Ivan today, you can go follow him on YouTube. He's also one of our trading mentors, trading analysts in our Discord. He does webinars and things like that. He's answering questions. He's a big part of our Discord community. So if you enjoyed what you saw out of Ivan, go check him out on YouTube or in the Discord, and he's on the live stream all the time, so you'll definitely be seeing more of him. But yeah, thank you for coming on again. And in a second here, we're going to transition over to Chris. But yeah, Ivan, always good to see you, and hope you have a good rest of the day.
Thank you very much. You too.
All right.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
First time seeing that promo. Very nice, guys and gals. That was awesome. Hey, everybody. Happy Monday. Welcome back. A1 Trading just after 10:15 a.m. It's 10:18 on Monday the 7th. Pretty low impact day. Up on the day, which is always a good thing. We gapped a little bit lower. Let's take a look at a little bit of everything. My dog seems to be pretty indecisive today. Just want to hang out. What's up, bro? So we're dealing with a lot of chop. The big catalyst this week is going to be Thursday with the CPI news coming out. And I want to talk about that for a moment, kind of repeating what we've been mentioning here on session the last couple of weeks. Let's have a look at the calendar. So this week, all light impact, we were up on volatility a bit. So volatility, here's VIX, and if we go to VX for VIX futures, also up on the day. Probably a lot of this is due to oil, I would imagine. You know, we've got another pretty big rip to the upside on oil. I actually did close out my CL positions. If anybody's in my Pulver alerts, there's 2 trades that we had. One of them was a 60, it was a 65.50 sell put and a 64.50 buy put. We collected about 50 cents credit, and I closed that one out. I think I closed it for like a 25 cents debit or less. And so that should have been about $250 per contract profit. So that trade is done and closed. And then I also had one that had a little bit more risk to it, and I just closed that out today. It was a 65 sell put, and I did 1 contract, and then I did a 55 buy put, and I did 2 contracts. I collected a net credit of $1, and today I closed out, so it was $1 credit, and I closed out for 49 cents debit or less. And so the reason I want to get out of that trade is I don't want to be sitting here with the exposure of, you know, what oil is going to do if we have more crazy stuff. Like obviously I was in based on support, you know, the geopolitical event that helped this squeeze happen. You know, you have to remember, like, hedge funds were crazy short, commitment of traders and advisors were crazy short. I just had another trade close for profit there, 250. We get that one updated. That should have been trade number 4. Get to edit that one today. So I've got 4 for 4 little winners today. Not too bad. I'll get right back to my train of thought here in a minute. Filled and closed for 15% profit target. Very nice. Okay, so going into the charts, and that one just got filled for profit as well. Well, that was pretty easy. Okay, so filled and closed for 15% profit target. All right, well, a little 5 for 5 in the SPX feels pretty good today. And I think I actually might take, am I getting greedy if I take another trade? Probably. 5 for 5 is pretty good. All right, let me get back to the thoughts on oil. So I was taking oil based on the technicals of support, okay? So the fact that we had the geopolitical event where nobody knows now. I mean, if we have damage in the Middle East and we have conflict in the Middle East and oil prices go up, makes sense. But what I didn't love is that oil prices were dropping even in the wake of China coming out and doing stimulus and having that 2-week run where China stocks could do no wrong, and they're still ripping like crazy. It wasn't until we had the, you know, tensions in the Middle East that then jumped price higher. Now, and I say that because what I don't want to see is oil prices then turn sharply lower, and my $65 put, which was right here at those lows, that is threatened. And even if it doesn't go below 65, the velocity in which it can move, and especially if we go lower, that trade has a lot of risk on it. So I was risking about $2,000 on the trade, and I just wanted to get rid of it. So ended up making about $150 profit today, and I'm just taking the profit and moving on and eliminating the risk. I don't want to be kind of exposed, especially if it was a credit spread, wouldn't be a big deal. If it was just a credit spread, wouldn't be a big deal. But because it was basically a cash secured put, I'm not going to take settlement on CL was my instrument here, but I'm not going to take settlement and say like, okay, go ahead and give me oil. I'm not going to do that. So the fact it was just up 50%, taking the profit, moving on, and that is the day. So CL is done. Let's take a look at everything else. You know, natural gas is pulling back a little bit. I actually don't mind looking at some natural gas in a, well, something like this. I hope natural gas actually does something like this, pulls back to around $2, and I'll probably get a long position with a credit spread. So I'm going to bump this up. I have a chart alarm set at these lows, which haven't been tested. So I'm going to set this at $2 here and go to like 2.00 and then put in a potential bull put spread and just give myself a heads up that I can take a trade on CL or on NG rather. Gold, super sideways on gold. This is my plan moving forward for gold. We're sideways. I hope that we can continue to stay sideways or just have this very light drift to the downside, and let's find the 50. Let's find the 100. There's also a chance that nothing happens here. We might just go sideways, sideways, sideways on gold, and the 50 period might end up catching up to price. And that's okay too, because if we go sideways and then just find the low here, I might have to just say, well, I guess I'm just going to buy more gold. And that's understandable, but I'd like to see if price can dip between like the 50 and the 100. And that's the only way I'm going to kind of justify like getting in at these highs. I mean, I'm still running with gold to the upside. I of course want it to go higher. I think, traders, investors are pretty excited about gold going to 3,000. I mean, that level can certainly get hit. I would like to see a pullback first. I thought that the dollar impact would have a little bit more of a pull on gold, but it didn't. I mean, you take a look at the dollar for the last like 5 trading days. Outside of today's pause, 1, 2, 3, 4, 5 days in a row, that's a big move on the dollar, and gold did nothing. So, I mean, we had the dollar move about 2.5%, and gold did nothing, right? So if there's a lagging effect, maybe the dollar's already been kind of priced in for a bit of a squeeze. If gold shows a little bit more follow through with that stronger dollar, perhaps that gives me the pullback that I want. Just take a look at the structure here. Gold looks really, really good to just focus on buying some dips. That's it. Just focus on buying some dips. So if we pull back into this 50 period, that's 25.50. Between 25.50, 2500, I'm going to add to GC. I'm going to add to GLD. And I will dollar cost averaging on GLD. I'll probably take some options trades on GC. Silver. Silver is above the structure. There's 2 things I'm watching here. If this is a break and a pause, if it just gets a nudge higher to the upside, that could be a nice bull flag. I'm hoping it's not this. I'm hoping it's not past resistance and support. So this would be resistance here holding, and then past resistance that is now support around 26. I don't really want to see silver come all the way back down to 26. Now, if it does, okay, fine. I'm still interested in adding long positions here, but ideally, I would like to see silver do this. Either just keep going slightly higher and then getting to my measured move around 35.80, or we have it hitting, pausing, pulling back to the backside of this trend line, and then making another push higher. Now, I do wonder if gold and silver make a push higher at the same time, or if we have to do a comparison. Here is gold versus silver. And over the last couple of years, we really haven't had a crazy outperformance by one over the other. So we have some pretty good structure. If you look at gold versus silver, right now, it looks like silver can get the upper hand if we just continue to push a little bit lower. That gives silver a slight outperformance. But from there, the nice thing is even though this has been going back and forth, both assets individually, I'm looking to go long on both of them. So all this is helping me kind of time. Do I think that silver could outperform gold, and maybe I can add more silver positions to kind of play that more aggressively? Or do I think that gold can outperform silver? Does that make sense? So if we're sitting here at the low, here's a question, everybody. If I'm sitting here at this low on gold versus silver at $76 at this level, this is support. What would you do down here? Would you add more to gold or add more to silver if you're down here at the bottom? Hopefully this makes sense in doing the comparison between gold versus silver. If we're sitting at the bottom of this chart, I'm looking to add more gold to my portfolio, because if we go up, gold is probably going to look better as a performer than silver. If we're up here, I'm looking to add more silver versus gold. Does that make sense? So this is a way to kind of figure out which one I want to allocate more to, maybe take on more trades, add more credit spreads. So it just depends on where they're at. But both instruments overall, I'm looking to go long on gold and silver. Okay. All right. Bitcoin had a nice little turn the last few days. We're up to 64,139. BITO turning the corner a little bit. I still want to see this one. I mean, really, this structure I want to see breaking. This one doesn't look the same as others. BITO looking a lot different than IBIT, looking a lot different than Bitcoin, looking a lot different than MicroStrategy. If we can base here on BITO, start breaking above, let's say $20 or $21, then this looks a lot better for hopefully a catch-up trade. So I did put in 16 by 15, collected about 350 to 365 credit. That's a nice little income play for the end of the year. If there's any assignment, like I said here, I'm willing to own shares at 1385 break even based on assignment both levels, and then my break even price with taking on 200 shares. So that's in my pulver alerts as well. I'm willing to own some BITO. Eventually, they've already been approved by the SEC. We're waiting to see when the CFTC approves IBIT for option trading. So for right now, IBIT for option trading, you can see it says no options are available. But when we get the CFTC and the OCC giving this permission to trade options, then I will be adding a little bit more exposure to IBIT, which is the BlackRock ETF, to again just stay with the pace of whatever Bitcoin wants to do. I've got some measurements here. You know, if this August low is going to be the low, and we actually make another push, I'm looking for this to get up towards 107 to 108. That's a nice little measured move. 109 is the Fibonacci level. My symmetry is around 107. If we have a fifth wave move, I'm still going to play around with that as well. So if we have a wave 1, this is a wave 2, there's a wave 3, pause for a wave 4, still have a wave 5. As a trader, I wouldn't be looking to take off any profit until we have a completed fifth wave. So if we're going to be in a bull market for Bitcoin and there's more upside here, I'm going to look for a fifth wave, and I'm going to start looking for divergence in that fifth wave in order for me to exit, take some profit, recalibrate my trades rather than sitting here and saying like I'm holding it forever. I mean, if my cost basis is around low 30s and we're trading up to 130K, that's a pretty good ROI as a trader, right? That's a 250 to 300% gain on your capital. That moves the needle for me. I still want to have some exposure. I'll probably keep some type of like 3 to 5% exposure in case this story of Bitcoin is manifesting into being a $250 to $500,000 spot price or $1 million ever in the next 5 or 10 years. But as a trader, I still like ROI, and I can scale back on some of the cash and protect it, go back to cash, and maintain a healthy kind of percentage base. Does that make sense? Because if I go from a 3% investment and all of a sudden it's trading for 6, 7, 8% of my portfolio because of profits, I'm going to take the profits, get it back down to that 3% exposure, and just keep the same like allocation. So that's what I'm watching as far as gold, silver allocation, Bitcoin allocation. All my China plays, same thing. HSI is up today for some fresh highs, so another gap higher. Going to Alibaba, we had another push higher, but still a red candle. I mean, this is okay. I'm just going to make a slight adjustment to my fib here for any type of add-on trades. I will take a look. So the 110 by 105, we put in a credit spread on the pulver alerts here, collected 255. Let me see what that's trading for right now. Look at Alibaba for a second. So right now, 260 is trading for $2. We're already up 60 cents a contract. I'm okay with a 50% take profit. If we're seeing this trading down to like 125, 130, I might just take the profit on this and move on and then just reallocate. But I'm also willing, if we get a pullback here and it gets below 110, I'm still willing to take on some shares and take the assignment. There's some pretty rich premiums in here where if I want to own the shares and kind of add some covered calls and keep track of my stock ownership. I mean, right now I don't have any trades or I don't have any ownership with this account for Alibaba, but for this one I do. So my Alibaba here, there we go. So I have it was $1,000 position. It was really small, and then a bunch of options, some ratio spreads. Like most likely, all of these right here in my account. The 110 by 105, that's the one that we just talked about. So that one is a little income play. These I am probably going to let these run very near to expiration, or try to get like 75 to 90% of the credit. So I have a credit spread, have some ratio spreads, and I have like a 112, which is just a fancy way of saying cash secured put with a bear put spread. And I will let these run and try to max out profit. So overall, this should help me, maybe grab another $1,000 or so of profit. And if I have the shares, they're up. I'm up about $320 an account. So I'm up, I don't know, maybe like $3,000 or $4,000 on Baba right now. If I take a look at everything, just kind of revisit the China stuff. Baba is up. I've got $6,000 in open positions. I'm up about $13,300 for the year. Baidu up around $12,300 for the year. This one is running with mostly open positions. I do have some of them covered. I don't mind taking off some of the profit, but I'm not going to stop this thing at 112. I think Baidu has more upside. We're getting a bit of a pullback here. We have tested these recent highs. I'm hoping this has a reversal pattern written all over it. So this structure breaking, ripping up here, a little bit of a bull flag would be great. More upside. I'm trying to get this called away at like 125, 130. That's if it's aggressive. If I can lower my cost and maybe add in a call that's maybe even out further, I'm just gonna let these things run. But I've said this for the last like couple weeks now. As this China stuff is taking off, I don't have a huge timeline on these China plays. Like if I've got profits here that are looking really good for the next 30 to 60 to 90 days, I'm going to start protecting those profits. And it's been a year in the making, and it's starting to pay out really nicely. I don't really have a long-term horizon. If I can look at my measurements, I mean, sure, Alibaba and Baidu to me look like they have the most upside potential. I just don't know how much conviction I have to stay in these trades when it's like right now there's so much gain happening in such a small amount of time. Usually we don't see stocks rip like this. And I mean, in a way, it's like maybe they don't even offer much of a pullback. That's the tricky part is, we might see this market move and you're like, okay, I'll just get a dip to buy in or I'll get a dip to add a credit spread. And it just does this pause and then go, pause and go, pause and go. And it might be on its way. Like this might be the destination. And if there's no pullbacks here, it's good for income. But what I don't want to do is tie up a bunch of option trades out farther, farther, farther into like, Q1, Q2 of next year, because that's not my timeline. If this rips up here to 160, I want to be able to get out of that trade as soon as possible, right? Because to me, that is my measured move. So anyway, that's where we're at. Has silver outperformed the stock this year? That is a good question. Let's find out. Let's go to XAU USD. Silver's got to be up there outperforming. Oh, that's gold. Let me go to silver. Silver, it's going to be close. Let me go to the beginning of the year. I mean, if we're up over 20%, we're outperforming the market. So here's 2023. Let's go to January 2024. Should have been down here near the lows. So here is, so we started out, looks like right in here. Right in here is January 2024. Let me mark that. Okay, so we're going from this area to current price. It's up around 32%. So the answer to that question, Lee, is yes. So silver's up about 30+%. Gold is up over the S&P. I think gold is closer to 25, 30% as well. So gold going back. I mean, this one came ripping out of the gates too, by the way. This was, I mean, the credit spreads that I had and the diagonal spreads that I had, the leaps that I had, all these things were in profit within like the first 3 months of trading. It was a crazy aggressive move for gold this year, which wasn't a bad thing. It was just crazy. I'm like, well, I'm already hit my profit target, so I guess I'll take some profit. So here's gold. We had a bit of a pullback to start out the year. Looks like something right in here. Gold is up around 28%. So believe it or not, silver's actually outperforming gold this year. That's you would think that's not the case. But either way, like 28.5% to 32.5% outperforming the S&P. That's pretty impressive. Now, is that common? Hardly ever. Hardly ever. Unless there's some underlying macroeconomic thing that's happening, which we all know is like potentially unraveling, right? If the Fed messes something up, we don't have a soft landing. If the US experiences higher inflation, if the US economy starts to slow down, if we have all these things are in the background, everyone's talking about it like the US is going to fail, something's going to turn over. But don't underestimate the power of fiscal spending and don't underestimate the power of monetary policy, because China just did it. You can see how the markets responded. The US just cut with the Fed on September 18th. The market responded with higher highs thus far. The market's struggling at these tops for the US. I think we're missing a catalyst right now to generate higher highs. We're missing a catalyst, right? So it's understandable. Like we don't have the next justified reason to go higher. So what justifies this? Well, if we have CPI lower, will the market take that as great news? Okay. maybe we're forecasted to print 2.3% year over year this week on Thursday. So is CPI enough of a catalyst to drive this market to all-time highs? And if we get to all-time highs, do we stay there? I mean, if we have price action that does something like this, let's say that's very quiet until Thursday, and then we gap up here, right? So you'd have like, a lot of chop here for the next couple of days. If we gap all the way up here, is this enough to then use this as past resistance to become support and then still melt up higher? Maybe, right? Or does this gap up and then fade? I don't know. But is CPI the next catalyst this week? Possibly. What else do we have? Well, this week we also have earnings season. So Thursday, Friday this week, we have some notable earnings. I had mentioned like Domino's Pizza, Delta. Friday is going to be all about financials. So you have like BlackRock and JP Morgan, Wells Fargo. Those are hard to trade because they're actually pretty low beta stocks and there's not a lot of movement. You're expecting like maybe a 2 to 3% move. My favorite earnings plays are ones that, we're looking for like 8, 9, 10% expected moves. Those are a little bit easier and they're obviously easy to like get a higher than expected move, and also nice to like sell that higher volatility if you think price is going to be somewhat contained. So, we have CPI and earnings season this week that could act as a catalyst. This is about it because the only other thing that's going to get sprinkled in for the rest of October. Okay, what else do we have? We're going to have more US inflation news, right? So you'll have your PPI and you'll have your PCE. Because CPI is going to be this week. We'll still have PPI, PCE. We'll still have weekly unemployment claims, which is going to be on Thursdays. But employment news is essentially done. Until we have non-farm in November, the employment news right now is like everything looks better because of that beat that we had last week on Friday for non-farm payroll. So this is now focused in on inflation again, and it depends on how excited the market gets about it. Okay. I think that with oil doing what it just did the last couple of weeks, with China pushing higher, with the PMI numbers that we saw, there is a concern that we could have higher inflation moving forward. And this is the reference that I've been making for the last several weeks. This is a third-party calculated inflation report, but when this thing bottomed hard at 1.5 and is now trading at 1.98, okay, or showing rather 1.98, can you imagine? Just put this in your head for a second. Can you imagine that this week's CPI we actually show a 2.3% year over year, and the market gets super, super excited. And then you go 30 days later, and the market shows us a 2.8% inflation year over year. Can you imagine the switch that the market would have? That's essentially what this is showing. We have a low here about 1.5, and we're currently showing 1.98. That's almost a 0.5% higher. So inflation is not gone. And for the U.S. to, kind of take the victory lap before it's official. Look, we're not less than 2%, right? We haven't hit 2%. I know we've come down a long ways, but if you ask the average American out there, is inflation helping or hurting you? Everyone's saying it's hurting. 70% of the economy is living paycheck to paycheck right now. Those that have the assets and have the cash are doing fine. They're still spending, but those that don't are feeling inflation, and they have been for 4 years now. So if we see this type of print happen, that's not going to be a good thing. Hasn't happened yet. This is all kind of lagging information. This is what makes it tricky because the market can get all excited because we actually print a lower CPI. Awesome. This is perfect. It's trending lower, but not paying attention to the fact that behind the scenes, oil prices are up 15%. And we've got fiscal spending in China. We've got PMI numbers getting lifted up for manufacturing and services, mostly services. Okay. You've got unions that are striking that are asking for 50% pay raises. Higher wages is also inflationary. So, point is, I think Powell and the team is smart enough to recognize that they can't just get crazy dovish. Because if they do, something tells me that they get crazy dovish and we see that the Fed is cutting rates. And all of a sudden you look at the 2-year, okay, which is supposed to be about the average of the stand. Look at this thing. This 2-year is up 0.5%. And so right now, does everyone know that the Fed, the expectations for the Fed in 2025 has dipped by about 50 to 60 basis points? So the Fed is no longer expected to cut as aggressively in 2025 as the market thought. This all switched within the last month or so. The Fed is still expecting to cut through November, December by 25 basis points to get us up to that total about 1%. But if that's it, and they go into a pause cycle, and all of a sudden the official cash rate for the Fed is around 4, Okay, let's say it's around 4.25. Well, if it stays there, I mean, if the 2-year starts to jump hard, the 10-year starts to jump hard. We go back to this inverted yield curve between the 10 and the 2 right here. This is what Frank and I talked about for a while. I mentioned if the labor market improves, we're probably going to see that we get reinverted, right? We'll top gun this thing and, what was it? Testing foreign relations. We're inverted. Anyway, if we get inverted again, I think that's a good situation for the labor market, but it just means it's more noise for eventually when we come out of that. That's a softening the labor market. I don't know, but that's the whole discussion has been: should we have a recession? Are we in a recession? I just don't think that what's happening is we're not getting a broad, all sector related recession. Okay, we've had this rolling transitional recession, which has been this sector gets hurt really badly and then recovers later. Then this sector gets hurt really badly, recovers later, and it just hasn't been felt all at the same time. So I don't think that the bear pouring out there is wrong. It's just you don't get the full catastrophic great financial crisis type thing where everything's bad. And that's what they're planning for. That's what they're looking for. That's what they want. That's what that's how they're selling headlines essentially. So the reality is things are still working, but this makes me concerned that the Fed is going to take this victory lap and all of a sudden they're going to shoot too dovish and too aggressive on rate cuts. And then they're going to be stuck where then they have to consider raising rates. And so we would have that potential where the Fed goes the most aggressive rate hike cycle ever to then when we officially start to cut, we cut aggressive, aggressive, aggressive. And maybe we consider aggressive through 2025. And all of a sudden here's the 2-year, here's the Fed funds rate. And all of a sudden inflation starts to get stickier, right? And then the Fed funds rate is no longer restrictive on inflation, and we have the same problem all over again. Maybe not to the degree of 9%, but if inflation is still above 3%, 3.5%, 4%, that is a problem. Okay. If it feels bad right now at 2.5%, 2.3%, if we go up by 0.5 or 3, it's gonna suck, And if we have the longshoreman strike going on in January 2025, that was costing the economy about $4.5 billion a day. You do that for a month, it's going to be felt. There's going to be products and things that aren't getting to consumers. There's scarcity, there's outages. You're going to have people lining up out the door at Costco to get freaking whatever they want to hoard and store in their basement, or who knows, man. It's just like it's so fast to see how quickly people go from, everything's going to be okay to like emergency. And it's terrifying, So anyway, that's a little public service rant for the day. What else we want to talk about? We want to talk some currencies. I still think the dollar index, after this little rip, we're coming into a decent level of resistance on the dollar. I'm not ready to sell it yet without confirmation. One level I've talked about here is right around this 382 and 50 pullback zone. So if we go high to low and we pull back to that 38250, I'd be looking for this. This is a daily time frame. Look for a price rejection. Let me box this in for a moment. If I box this in, where's my box? There it is. If I box this in around that 38250, right in here, go down to a smaller time frame. Okay. Could I see? This is a nice inefficiency. Here's what I'd like to see on this dollar. If we see a bit of a bull flag and this thing runs up one more time, I'm going to look to see if we just break a trend line. If we break a trend line just like that, there's no reason to call the top on the dollar. But if we can go up a little bit higher, eventually when this thing rolls over this trend line, I would be targeting this pocket and inefficiency and see if this is actually going to start going lower and lower and then revisit these levels. I still believe that for the stock market to go higher for the rest of the year and to get to all-time highs again, the dollar is going to have to get weaker. I don't think the dollar gets stronger and the stock market goes up without it feeling really awkward, because the dollar's typically a risk-off trade. What we haven't seen in the currency market is we saw the dollar turn really, really hard, right? So today we have risk-off flows. Look at your New Zealand and Aussie to the downside. Look at your Swiss yen to the upside. Risk-off flows as far as currencies are concerned. Dollars at the midpoint with the euro, but go figure. We've seen a lot of noise on the yen. Right now we're seeing Aussie, New Zealand to the downside. Is it because, to have like very closely related currencies like China with the Aussie, New Zealand, with their ties to China, to have these currencies getting beat up this badly, this is not like full on risk appetite, you know. So if we take a look at these dollar movements, the dollar with this rip has turned the Aussie dollar hard off of resistance, really hard. Okay. Now, do I want to short the Aussie dollar? No. This was a spot to short it at equal highs. Right now, I would just wait, because if the Aussie dollar comes back into the midpoint here, is there a chance that this starts to catch a bid? Maybe. If we have a weaker dollar, perhaps this is a trend. Otherwise, this thing is primed for just a range. Look at the structure. If all this Aussie dollar does is top out here, pull back and make a lower high, and then pushes back down, we're just in a range. Could I see that happening? Sure, that's an easy swing trade. How about the Kiwi? If you go New Zealand versus US dollar, we also have the New Zealand dollar that's expected to cut rates this week by 50 basis points. So they're planning on cutting rates on Tuesday night, 9 p.m. Eastern time, cutting by 50 basis points. Well, that takes away some of the carry trade opportunity that you'd have in the New Zealand dollar. And again, take a look at this area. I'll just box this in with a couple horizontal lines. We have resistance right in here, and we have some support right in here. And with this aggressive turn that we've seen the last 4 or 5 days, okay, if this pulls back at all, high to low, pull back into here, can you sell it here, stop loss above, and then swing back down to support? Well, look at your reward to risk. It's a 2-to-1. It's not a bad trade. If I put, 0.5% risk on the trade or 1% risk on the trade and I get 1% to 2% gain, it's an easy trade. But will we see the dollar actually give up the strength that we've seen in that very aggressive time? The dollar has not been this decisive for a while. And to have this rip to the upside, again, geopolitical concerns in the Middle East, what's the dollar doing? Gaining some strength. Okay. So I'd like to see how the dollar behaves between this current price and roughly 103.50. If you want to write a couple numbers down, 103.50 would be my resistance area. If the dollar first pulls back, okay, finds the backside of this break and then goes higher, I'm not looking to short the dollar as aggressively as I am now. So I still don't like the dollar. Outside of I was correct on this being a bear trap, and I was warning traders like, don't force sell trades on the dollar because it's very easy for the dollar to squeeze. It did. Okay. Now, right now, if we play around in the middle here, I'm not interested in trading the dollar at all. And that would translate into every currency pair. I don't want to trade the dollar if it's going to be noisy in the middle. If the dollar gets all the way back up here, sure, I'll short the dollar and short it pretty aggressively. If the dollar comes back to this low, okay, I mean, if we come back in this low, does it hold or does it break? If it breaks and we have more room to drop, well, that's an easy directional trade. If it's in the middle, I'm trying to stay out of it. If it's at resistance, of course, I'm going to look to sell it. So it's just picking your levels on the higher time frames. I don't like to sell or buy in the middle when the price is going to fight back and forth. I try to position it where I can buy low, sell high, and have a higher probability of a trade plus good structure. Okay. All right. So that's dollar index. Any individual currency pairs you want to take a look at? Yep. So it looks to be range bound, but that's why I'm watching that midpoint pretty closely. Because if it's in the middle and it starts to fade back down to the lows, then that's what gives the market a potential like risk on rally. So looking at the markets right now, everything's down. S&P's down about 1/3 of 1%. NASDAQ down 1/3 of 1%. Dow's down 0.27. Russell down 0.7. Russell volatility's up a little bit today, up about 8%. Oil still up 2.25 or 2.5%. Natural gas is down almost 4% today. Gold's down slightly. Silver's down a little bit more. Bitcoin's actually up nearly 2%. Good. MicroStrategy up 6.7. Good Lord. MicroStrategy, what are you doing? What is the news on MicroStrategy? Let's see. Moving higher on Monday. Pfizer, give me $30. 29.36. Okay. I've got some positions on Pfizer. I think I've got an October something expiration. Let me find out here. Pfizer, I did a roll on this one. Pfizer. Okay, so I've got a 29.50 out to not this Friday, but next Friday. Right now, my Pfizer position, I did a diagonal spread. I'm just kind of slowly but steadily working the cost down. I'm up around $18,000 on Pfizer, and hopefully, if it gets called away at 29.50, then that's going to be roughly my profit. If it is something I can roll again or add another sell trade to it and continue this diagonal a little bit further, then I can increase it by, if let's say I do another like 30 cents credit, well, that lowers my cost basis by about $2,400. So about $300 per account. So any little bit that I can collect more credit for, this actually helps my little Pfizer position, which is good. So right now, a little gap higher, no complaints. I think Pfizer, I mean, I own some Pfizer. I've owned it for a while. I've been pretty interested in this one to be a bit of a catch-up trade. If we can pull back to, let's say, $32, that's a pretty shallow retracement just from this recent high to low. If all we did was find a little bit of a pullback in here from this 23% to this 38%, come on, Pfizer. Can't you do something like that? Can't you? We got good support back here into 2020. Have a decent dividend. Pfizer fundamentally is pretty strong. If I go to my snowflake analysis, so I don't mind some Pfizer. It's not like crazy high on the premium side, but I think it's a good stock to own. Dividend not well covered. Interest payments not well covered. Forecast to grow. Trading well below estimated value. It's been a value play from the price to earnings, price to sales side. Price to sales, price to earnings are very undervalued. Discounted cash flow. I'd love to see this trade at $80 a share. So longer term, sure, I can invest and be patient and expect about 2 to 3% gain. That's going to take a while, but I don't mind that being the play. Pure average 5.2 and Pfizer's 2.9. So a lot of reasons to be, in it. Plus, it's in the healthcare space, which is probably going to be one of the stronger sectors moving forward. Anyway, whatever. I like Pfizer. MicroStrategy. This thing is crazy. We could be. I mean, are we going to break all-time highs on MicroStrategy without Bitcoin doing it? That would be nuts. How's my income play doing? So the 111. Let me see how that's doing. The 80 by 70 collected some credit there. Willing to own some shares. We're a long ways out from getting assigned. I don't know. I mean, it's a good income play. Let me see what I've done on MicroStrategy so far. MSTR. MicroStrategy is all income based. I've got a total of about 6K in profit, and it's just a lot like out to end of the year, out to Q1. I'm timing this a lot like Bitcoin. I haven't just bought MicroStrategy. I kind of wish that I did when they first split. They split back here at these lows. Dang it! I should have just bought this stupid thing for a fractional investment, but I didn't. So I just put in a bunch of option trades and hopefully still generate a bunch of income. But wow, impressive run. We'll see what Bitcoin does. It's funny how MicroStrategy's kind of taken on a price action of its own. Like it's close to getting to all-time highs. All right. Anyway, what other questions? Any other charts? Any other requests? We did gold. We did silver. We did oil, natural gas, some other commodities I've been watching. Talked about China for a moment. JD is down. I took some profit on that last week near these recent highs. I'm going to adjust this fib for maybe a bit more participation in JD.com. I'll see what this one does. If this settles back into like $40, $40 or less, I might be looking at some credit spreads on JD, probably out to the end of the year. Anton says 0.42% reported Pfizer for Q3. So they had earnings? They didn't have earnings today, did they? That was not on my radar. Pfizer. Their earnings date is October 29th. Okay. Let's see here. How about a strategy on coin? Yeah, we can take a look at Coinbase. And then am I good for the next couple of minutes, or we have Nick Phillips coming on at 11? Coinbase. So I had my fun in Coinbase. I did a lot of credit spreads back in here. I took some ownership on Coinbase all the way down here and flipped it for profit. I bought back in at the double bottom, flipped it for profit. I did a couple of bull put spreads in this area, but not a ton. I don't know. Let me take a look at something here. Take a look at the DAX. Yep, I'll take a look at the DAX. Let me go to Coinbase here. I'll look at the fundamentals to make sure. I want to make sure they have cash. So this would be a concern. So became profitable this year. Okay, great. That's not super encouraging though. Earnings are forecast to decline by an average of 20%. That's not good either. Shareholders been diluted. So we're looking at some, I'd say not like ridiculously high for tech, but 28.6 price to earnings, 9.4 price to sales. This is what I don't like about Coinbase. So look at the current price at 170 to fair market at 108. The only way I'd be interested in doing something on Coinbase would be if the IV is high enough to sell options and do some type of 111 or some type of ratio spread. So let me actually take a look at this. IVR is, let's go to Coinbase, trading at 60. It's not awful. Let me have a look and see what this buying power would be. So if I went out like 74 to 102 days, let's see what this looks like. So could I do, if I could take assignment around like 115 or lower, that wouldn't be awful. Let me see if I can orchestrate a trade like that. So if I did, let's say, if I want to just sell a put at 115, that's a 12 delta. I mean, I'm wondering if I like buy the 120, sell the 115, that's a $1.03 debit. And I could put in like $100 put. I mean, I could grab, this is a pretty good income play. Ties up a little bit more buying power than I want. But if I were to take ownership, here's how the calculations would work out. I could do, maybe I'd take this even cheaper, a 115 by 110. So what I'm doing is a bear put spread. A 115 by 110 gives me a $5 max profit, and I would still be willing to take on shares at $100. That discount would be this. If I take the assignment at 100, okay, and I get a 396 credit, and then I also get a max on the bear put spread for $5, I would own the shares at 9104. 9104 from current price means that the stock price would have to drop another 40, almost another 47% for me to get assigned. That's a big discount, obviously. If I own it at 90 something, I mean, what's nice is I could take a very quick repair. If I went out like 30 days or so, I mean, you're getting a crap ton of money on those premiums for a call. So if I did take the assignment at $90, I go out 30 days, I'd lower my cost basis by $20. So Coinbase was a stock that I did this back in 2021 and 2022. I took a break-even price of around, assignment at 165 and turned it into a break-even of around 55 and flipped that thing for 40, 50 bucks a share. So it is a trade that if you've got the cash, it's pretty easy to repair. So I think I'm going to take this trade. It's going to tie up about $4,000 in buying power. This account, this account, this account, this account. I'm going to go ahead and take the trade on. I'll put this in the Pulver Alert section. If I have to go, let me know if I have to go. Otherwise, I'll kind of wrap things up here in the next, I don't know, the next maybe seven minutes or so. So I like this giving me over $4 of credit. It's a bit wide right now, but if I can get $4 or better, that's pretty good. So this is going to be a 115 buy put, a 110 sell put, and a 100 sell put. It's a 111 strategy. I'm going to try to get $4 for the trade. So let me see if that will give me $4. Not filling at $4. There's two things here. One is it's an income trade. So if price goes higher, I'll just keep the income for $400 a contract. And if I get assigned, I'm willing to take the assignment, lower my cost basis, and repair the stock. Getting assigned at $90 doesn't tie up a bunch in these margin accounts. It's only going to be about $4,500 in buying power. So let me see if I can get I'll try to penny it down there, $399. Nope. $398. $397. All right, let's try $395. Filled at $395. Okay, so I'm going to try to get that filled for all the accounts here. 97. there. Filled this account and this account. So this account is going to be pending. Try to get 394. Well, that didn't take much. Got filled at 394. Okay. And this account here, try to get 394. See if that will fill. 393. Final offer. All right, got filled at 393. Okay, so let me get this drawn up. So I'm looking at a 115 by 110. So I'm going to start a box here. 115 by 110 goes all the way down to $100 actually. So in this area, so I'm doing a what was the expiration on this? I think it was out to January 117. So 117 expiration, 115 buy put, 110 sell put, and then a 100 sell put, $3.95 credit. Willing to own, and that break even would be around 9104. 9104. If price goes higher with little to no risk of assignment, look at 90% profit target for income. So if I'm trading at 395 credit and I grab 90% of that, I'd still be happy making that trade. So basically, this is a little window that I get filled on. If I do get filled, I'm willing to take the assignment. If it starts to go higher, if Coinbase starts to work its way up, then this 395 credit will just start decaying and it'll be trading for, you know, $1.80 debit, $1.50 debit, $1 debit. The spread's a little bit wide, so you might have to wait time-wise out to December, out to January for this one to be profitable, at least to the degree of, you know, 80, 85, 90% profit. But I like the trade. Okay. All right. So I'm going to add that into the Pulver alerts, and that's a good one. So yeah, I mean, that's a good one. The premiums are pretty solid, and I'll take the income play. To me, I really think it's more of an income play right now than it is an assignment play. Bitcoin would have to crash a lot harder for Coinbase to drop down into, you know, a $100 assignment. Not saying that it can't. Certainly it can. And I know that I have to be pretty aggressive on repairing the stock. So the important thing is, if I take any assignment, I know my break even, and I aggressively work that down and repair my stock. So if I did take assignment and I own it at 91, you know, if I sold a $90 covered call, I would take the $20, $30 credit and just lower the cost basis, get it called away, and still make a couple $1,000 on the trade. So all in all, if I get assigned, I think I can actually make more money if I take the assignment. I'm just not willing to buy it right now at $170. Especially when I saw fair market value. What was that right here, right? Fair market value on Coinbase is 108. And so think about that. I just put in a trade right now that if I were to take assignment, I would actually own it at $90, $91, which is at a discount to what is fair market value for a discounted cash flow model. So that to me is a good thing, that I could own it cheaper than what it's actually fundamentally worth. That makes sense? So that's why I took the trade. All right. If I don't have any other additional questions, thanks for asking there, Ken. Hopefully that helps, and I like that trade, so I'll throw that in for the Pulver alerts in Discord. Otherwise, I will see you tomorrow, and same time, same place. So, all right, we're looking at prices are still pretty choppy on the day, down about 1/3, 1%. You know, IWM, the Russell's down a little bit higher, 0.7%. So yeah, about a 1/3 on the downside today, still gapping. Price is pretty contained. No major catalyst this week until Thursday with CPI. So we'll see if the market's even remotely interesting. Take a look at the indexes this week. Let's go to SPX. So far, the last 2 weeks have been very indecisive. One level to watch before I go. If we break below this floor, let me get a black line in here. If we break below this floor, which have been last week's lows, if we break below this level, there's room to drop to this FOMC low, and there's room to pull back a little bit deeper than that. Now, if we stay in here for the entire week and nothing really happens, CPI might be enough of a catalyst to drive it higher. So we could get to all-time highs this week on a positive CPI report, even though, like I said, I'm cautious of inflation, moving out 3 to 6 months and seeing that the Fed is too dovish and cutting rates too quickly, and all of a sudden we have stickier inflation, and we start to see inflation go trend to the downside, and then it floors at 2.3, and then all of a sudden we're talking about inflation back up to 3%, and the Fed looks silly. So that might not be a factor to the end of this year, but certainly into 2025, inflation is going to matter if it's trending higher. Okay. All right. Swiss. Today the Swiss is strong. I still am I'm against the Swiss bullish wise. I mean, they're cutting rates, or they have cut rates, right? They cut down to 1%. So if you go to cbrates.com, Switzerland has cut rates to 1%. And there's still a bit of a swap and a positive carry on that trade. I still like Aussie versus Swiss, CAD versus Swiss. CAD versus Swiss has actually been performing pretty nicely. I don't like that the outlier has been oil, though. I want to see this pair get stronger without having this like oil factor, even though it obviously helps the Canadian dollar. But just, a lot of it is this. I've got this yellow box that measures symmetry from this August 5th low. So if we go low to high, pull back, I'm looking to see if we hit symmetry. So even if this is just choppy in here, there's my low, there's my high. All this is just indecision, but I'm looking to see if we make a break for it. There's a push up there. There's a nice little pocket to trade back towards around 65 to 65.50. So I am long Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss. I'm not doing anything on the Swiss yen outside of holding a very small sell position. That's it. So I still like trading against the Swiss. It also is positive swap, but it's a risk-off currency. So if we have a risk-off tone in the market, I'm going to be sitting on break evens or some slight drawdowns, just collecting a little bit of swap. But I'm still looking at the bigger picture to have some risk on. If we have some risk on, then that's good for these trades to work out with pips as well as some swap. Yep, Pound Swiss, same thing. So I'm long against all of them. Pound Swiss, my target's 120. A lot of the pairs, just measuring symmetry from this August 5th bottom. So Aussie Swiss, for example, if we have a low to high, higher low to higher high. Now this market can turn and do something like this and give us some type of broadening pattern, pulls back and then rips up here. I don't know, but I'm pretty determined. Look at how this thing fell. Aussie Swiss on a daily time frame, these are crazy aggressive pockets. I think the market can find a way to get back to those and kind of neutralize it. So liquidity, in my view, is all the way up here. So from this low to this high, I'm just waiting to see if it, takes its time but gets up there. That's good enough for profit for me. So if we make higher highs and higher lows, it's a channel. If we make, equal lows, then it's a bit of a wave pattern. But I'm still looking for that liquidity and that pocket inefficiency to get filled. So that's why I'm bullish on it. Okay. All right. Anton says 2.5 to 2.3 reported by the end of the year. So you're saying it's going to stay where it is for the next several months of prints? Forecasted this week is a 2.3 print year over year. If it stays there, great. But it still needs to push lower. Okay. All right, everybody. I will wrap it up there for today. Okay. All right. Let me get this updated in the Pulver Alerts Telegram portion for A1 trading. I'll add it in that Coinbase trade. We'll talk more tomorrow, and have a good rest of the day. All right. Thanks, everybody. See ya.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.